It's March, and we got another Austin real estate market update for you. We're going to dive into the stats and show you what's going on. So, those of you that are thinking of maybe selling coming up or you're thinking of buying, you have an insight into what's actually happening in the market. So, I'm David Shapiro with my colleague Lee Abraham here at the Shapiro Group in Austin, Texas. We're a team of investors and real estate agents, and we're going to dive in here and show you exactly what's going on and how things are heating up. So let's start with the number of active listings. And you can see how going back to when the market was really hot in 2022, interest rates went up. And then we've kind of settled into this pattern here. And this is just normal seasonality. The number of listings declines in the winter, and then it picks back up in the spring. And so here you can see maybe we're starting that trend a little bit here with number of active listings. And I'll tell you, just from me talking to a lot of the top agents across Austin, they have a lot of listings that they're prepping to list soon. So there's going to be a lot more inventory coming online. Now, is that a bad thing or is it a good thing? We're going to answer that here as we go through this.
So, David, as you showed on the previous slide, we've got just under 1,900 active listings in the city of Austin, 1,864. Well, the key story here that will be demonstrated throughout today's report is, as you mentioned, things are really picking up. And when you look at the 30-day pending sales figure of over 800 sales, that's quite robust and much more than the 12-month average, as well as the past 1 month of closed, 3 months of closed sales. Basically, what it means is we've got a monthly housing inventory of just over 2 months if you're basing it on the pending sales. Now, we know that a lot of those sales fall out and that kind of backs off the numbers a little bit. So right now, as we just interpret these particular numbers, we're definitely looking at somewhere south of a 3-month housing inventory in the city of Austin. That's a strong seller's market by all definitions, and looks like things might be heating up, as we'll continue to show on some of these stats.
And so here you can see that 30-day monthly housing inventory over time. So when it was hot, we were under a month of inventory, as low as a half a month. I think there was even just a couple. Yeah, I guess that's just 2 weeks right there.
Right.
And then it went up to about 5 months of inventory. A balanced market is considered 6 months of inventory. So we never even hit that. And then seasonality last spring and summer, we saw the inventory dip as buyer demand increased. And there's just not enough listings. And I was listening to a podcast the other day, and they were saying we saw interest rates go to almost 8%, and everything that's happened over the last 2 years, and the real estate market didn't crash. So, like, is it potential that it would crash? It's pretty unlikely at this point after everything that has happened over the last 2 years. And I think that's indicative of what's going to be happening here, which is we've already seen the bad of it. And things are going to start to turn around, and we're seeing demand pick up, and as you see here, pricing as well. So the average price is up 2% year over year, and so we're on this trend where things have totally stabilized. Lee?
Yeah, so I think that at this point in the program, based on the historical data, the closed sales, it's right in line with our forecast. Some marginal year-over-year increases here in the first quarter, and the average sale price bumping up just a little bit for the in-town properties. So now days to sell, not a whole lot of fluctuation one day over a year-to-year view, and 2 days month over month. So basically hovering right in the low mid-70s. You compare that to a few of the previous years, and it's a relatively high number compared to the overheated market that we've had, and it's more indicative of a stable market. I'm looking for this number, David, to continue to dip down over the next few months as we finish up the first and get into the second quarter.
And that would be normal seasonalities. You can look back to 2019. 2020 is a little bit of an odd year, of course, but you can see the summer days on market lower than January, February. And so we anticipate the same trend here. And then the number of new listings up 32%. And that's good to see because we have had a lack of inventory. And so going back to like all these agents talking about, we got lots of listings that are prepping. That is good because there just hasn't been enough inventory. This lock-in effect, if you haven't heard that spoken about, that's all these people that have 4% and sometimes 3% or lower interest rates on their mortgages. It's really hard to move. I just talked to a client yesterday. He's like, I think I should just downsize, go to a much less expensive home, maybe have a mortgage that's only 20% of what my current mortgage is, the loan amount. And we did the math, and it's like it really wouldn't save him anything because he would go from his 3% loan to a currently 7%. And I'm like, that's it, lock-in effect. You might as well stay in your nicer home and not downgrade to pay the same. And so I think until interest rates come down probably to closer to 5%, that's going to be the case for a lot of people. And so it's good to see new listings so that the buyers that do want to buy, and they are out there, we're helping clients go under contract. We've had 2 clients go under contract on the buy side in the last 3 days. And then on the seller side on our listings, we're also seeing that activity pick up as well from buyers. So they are out there and they need more quality listings so that they can transact.
And so we look at the sale price list price ratio, again, hovering around 97%. I was thinking about this earlier, David. This statistic has the most moving pieces, the most variables. What's it listed for? What are they going to negotiate? What's the seller motivation? What's the market value? And it's been the most stable indicator over the past year plus. It's hardly fluctuated at all. And so we, oftentimes refer to this as the ultimate measure of market sentiment. And I think this bears it out. It's just 97%.
Yeah, and I think what you said is pretty interesting because sometimes we'll have buyers be like, well, I need 3% off the list price because that's the average. And that really doesn't work that way. It's doing yourself as a buyer a disservice because there's situations where the home is priced low and it's better to go over asking. We had a client in that situation in the last week that it was a multiple offer over asking. It was the best deal in the neighborhood. And we showed him that, and he was very familiar. What we find with buyers is they get so hyper focused on a neighborhood, on a price point, on a number of bedrooms that they're like experts in that area, in that subset. And so he was very aware that it was underpriced from the get-go, and he was happy to pay over asking and still feels like he got a great deal. Meanwhile, the other buyer that went under contract got below 3% off the price because we looked at the value and we thought that it was listed high and we could get them more than 3% off. So this is where having a really good representation on the buy side comes in play, so you know how much to offer, what's fair, and we can help you get really comfortable with that on the buy side. All right, and then our famous inventory barometer, and this is the most real-time stat that we've found to show. You can see over here that for last week, there was 240 new listings, 197 pending sales, and that's 122%. So anything over this line, the 100% line, means that inventory is growing. And below that line, it means that there's been more sales than new houses listed. So inventory is shrinking. Lee, anything you want to say on this?
Just that when we're doing this report next month, you're going to see a big jump in those pending sales. Over the past 2 weeks, you see that from the week of February 11th to the 17th, you were at 140, and then it picked up a good 25, 30%, something along those lines the following week. That trend is picking up. And so when we're running the stats next month, we're going to see significantly higher pending sales. And then the new listings will be interesting to see how those match up as well. But David, it's going to be a while before we get anywhere near a 6-month housing inventory with the trends that we're looking at.
All right, so that was talking about within the city limits. Okay, now we've broken it out. Instead of just doing the whole metro area combined, which it kind of blurs everything because you have what's happening in the city blurring what's going on in the whole metro and the other areas. We're just separating out the suburbs. So this is all the outlying areas. We're talking about Buda and Round Rock and Lakeway. All those areas are included. And so you can see the monthly housing inventory here is just under 3 months when we're using those 30-day pendings. And again, like Lee was talking about within the city, picking up here the rate of which homes are selling.
Yeah, it's basically the same phenomenon, little bit softer market compared to in town, but the same general trend. And very interesting as we parse out some of the underlying statistics now.
An average sales price up 5% year over year, 2% month over month. So, not too different from the city, a little bit higher, but again, showing stability.
Then here we have days on market, yet another very stable indicator. We're looking for this to drop in the outside city limit markets, just as we are in town. Right now, 81 days, which is at the upper end of the range for what we've seen over the past 5 years, but we're keeping an eye on it.
Yeah. Again, seasonality, it should drop going into the spring and summer. And then number of new listings up significantly, 37% year over year. We're now beyond what we were seeing in like 2019 and previous years. One thing to keep in mind with outside of the city limits is the population there is growing much faster than it is within the city, just because there's way more room to expand, to do new developments. I was thinking about this earlier because we have an acre within the city limits that has never had a house on it. And at some point, there's going to be 10 to 15 new homes on that acre. But that's a pretty rare thing to see within the city of limits compared to outside the city limits. Not that it's rare, but it's obviously way less common. Outside the city limits, there's new developments going up all the time, new housing that never existed before. And so it's easier for the population to grow faster outside of the city limits, and there being more housing stock, which is just all the available houses out there, versus inventory, which is houses that are available for sale. And so the housing stock's just a lot bigger. So this number should be bigger every year. So I'm not surprised. But the market is a little bit softer outside the city limits.
Right. Okay, sale price, list price ratio. And again, just super stable, positive year over year, positive month over month. And we're expecting that to continue. So David, now that we've taken a look at the in-town stats as well as the areas outside city limits, I think more than ever, and it's always been a very sensitive, direct relationship between interest rates on mortgages and the housing market. I mean, they just literally go hand in hand. But I can't recall a time when the market has been so hypersensitive to marginal ups and downs in the mortgage rates. And so the chart that we're looking at here actually is current as of today. We're recording this a couple of days before the end of the month, February 29th. And you can see the 30-year fixed rate has been trending upwards. In fact, I believe it's been 4 consecutive weeks since our last report that there's been marginal increases in the average mortgage rate across the board. And we're both out in the field working with buyers and sellers, and we know how the market sentiment can shift a little bit with headline news and that sort of thing. But if some of the macros go in the wrong direction, and obviously we have an election year, we've got international drama, war, all kinds of things going on. If this begins to tick up north of 7 and stays there, it's going to dampen the market. That's not shocking news, but the point that I'm making is that a month ago, we didn't really have this per se on the horizon. It was a little higher probability that things were going to be really good in the first and second quarter of this year. And right now, that is how it appears to me. But if this continues to tick upwards, it's going to dampen that enthusiasm and basically slow the market down. How much? It's going to depend on how much the rates go up or down.
Yeah. And that's kind of in the short to midterm, right? Over the next year or however long this takes. I mean, long term, there's just still not enough housing. And we've seen what's happened with 7% interest rates. So assuming they come down at some point, the market's going to continue to appreciate. I think even at the current rates, you've already seen some year-over-year price increases. So we're going to see appreciation, and we're still very bullish. The macroeconomic trend over the next 10 years is very positive for real estate appreciation. And so getting in, whether it's today or in a year from now, it's hard to know where the bottom is, and trying to time it is really tough. So we would encourage you not to try to time it. If it's right for you to go buy now based on your lifestyle and you can afford it, then you should do it. And as long as you have a long-term outlook, meaning you're going to own this property for at least 3 years, 4 or 5 years would be even better, you're going to see, it's very likely you're going to see appreciation and sell at a profit. Now, if you're doing it for lifestyle, you're buying a home to live in, the goal isn't necessarily a profit, but you don't want to lose money. And it is nice to have a little bit more of a nest egg when you sell to go if you want to upgrade and get into a bigger house. And so the demographics of it, meaning the millennials that are still buying are the largest generation. They're still buying in force. And you have this lock-in rate where we're seeing a lot of people who have 3% interest rates who are like, well, when I buy my next home, I'm not going to sell this. I'm just going to turn it into a rental. And so that is locking up inventory that would otherwise often come back on the market. So we anticipate continued appreciation over the long term. And so just keep that in mind as you're making short to midterm decisions. So, and that's what we got for you on this month. So thank you for joining us. If you got a lot out of this, please share it with a friend. Go ahead and give it a like. Subscribe so you get updated when our next video comes out so you can stay up to date with what's going on in the market. And if you're just even considering selling, you've thought about it, it's crossed your mind, or buying in the Central Texas area, please reach out. Or even if you're buying outside of this area, we do have a network of agents all across the country that we can connect you with. But go ahead and reach out in the description below, shoot us a text or an email, and we would love to chat with you and hear what you have going on, see about helping you hit your real estate goals. Thanks for joining us.
Thanks, everybody.